Good morning, traders. Welcome to Admiral Markets. My name is Chris. Today's focus on the charts, of course, and technical analysis, Forex, commodities, stock indices we'll be reviewing today. First of all, if you are on Twitter, you can follow me and myself and Admiral Markets through these Twitter names. Second of all, be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details on that. And third of all, but not least, is the fact that trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so when looking at technical analysis, we're looking at a triangle of analysis. First, that's looking at trend and momentum, looking at patterns, looking at support or resistance. That gives me the market structure, understanding if it's an interesting financial instrument or currency pair to look at. Once that is done, if I find it interesting, then I would look at the decision zones, what levels I think are key, what kind of triggers am I looking at those levels, and that would basically be my trading plan, and I would estimate if the reward to risk is interesting, is sufficient. So that's basically the scope of this webinar, but the main kind of the focus of today, as promised yesterday in the recap video, the weekly video that I add to Admiral Markets website on Mondays. You can find it when going to technical analysis, which you go to admiralmarkets.com, click on analytics, then go to technical analysis. And I promised Fibonacci and trends today, so we'll be focusing a bit more on those concepts. Regarding the calendar, basically you can see here analytics, Forex calendar. You can see a long list of events. They're marked as green, yellow, and red as always. Red being the most potential impactful. And we see some inflation rates in the Euro Germany here, the dollar GDP growth rate. Those will be interesting to see, plus some other events, a long list of them. Just check it out by yourself. Always be aware of those events. Regarding the key, what I would think is what are the key kind of upcoming events, news, data, releases are the following. We got OPEC meetings tomorrow, ADP, bank stress results in the UK. We have Friday non-farm payroll, and we have Sunday political events in Austria, presidential elections, but primarily the Italian referendum on the constitutional amendments that will be on Sunday. So that's just regarding the amendment of the Constitution, and the vote is directed towards that. So it's not a Euro vote, or at this moment at least, but it could have potential political consequences that might develop and unravel that could impact the broader Eurozone or the EU, Italy. That is all things we're going to discuss, Nanette and I, upcoming Thursday. So I won't dive into that right now. We'll just look at the charts in a second. But if you are interested in finding out more details about the impact of the Italian referendum on the Forex and financial markets, you got it right here on Thursday, the 1st of December. Alrighty. Let's grab the charts. Oh, sorry about that. There we go. So euro dollar, a bit of an indecision at the moment. We're seeing price not able to break through 105 and bouncing at the support level. Finally, I was looking for a bounce. It took a bit longer than I thought it would, but ultimately really seriously moving all the way to the bottom of these weekly charts here, these bottoms right in here. So that took quite a while before we got the bounce, but ultimately price respecting these levels. Will that be it, or will there be a bigger correction? I would still think a bigger correction up to a higher fib like the 38.50 or 61.8 fib seems likely. But we do have a political event on Sunday, so price could be very very lacking any kind of luster, kind of not having any, or how do I say it in a better way, like not having any initiative or just going sideways because of that. I think that 4 days is still quite a lot, so I think there's a good chance that price might make that upside to the 38.2 fib. Now, if price were to break lower, which I would find surprising, but if it does break through 104.60 and 105, well then it seems like the downtrend is already in play. But I think that seems unlikely before Sunday. I would expect either a triangle here or price to eventually make it up to the 38.2 fib at 110.75. No, sorry, 108, excuse me. Reading the numbers wrong there. Still early, I guess. 108. That's, at the moment, I think the most likely. Now, so far, we've seen a bit of a bounce, a couple of days here. Here, price went sideways, one more lower low, multiple divergence, and we saw a pretty good upside, then a downside. I think this downside is a hook back, in my view. Looking at the hourly chart here, you can zoom in, and we have a double divergence, and what I would consider this is probably a correction. Now, granted, price has fell pretty quickly here. But it could still be an ABC zigzag in my opinion. Of course, if price were to break through the support trend line, then who knows how far and how fast it could fall. And I'm not going to hold my breath for any longs, and would still be maybe looking for a bounce at the S2-ish, at 105, 104.60. But there could also be a trade to that zone as it breaks the trend line. There's not a lot of space there, but there could be some intraday trade right there upon the break to the downside. But I wouldn't be targeting too deeply. I wouldn't be targeting beyond 105, 104.60. Actually, those levels could still be a bouncing spot, in my opinion. At this moment, price is above that yellow trend line, so therefore I think there's still a better chance that there will be a bounce rather than a break to the downside. And if there is a bounce, then eventually there could be a break of this resistance trend line 2. That would be a bullish breakout to R1. That could be a bull flag, another breakout to R2, bull flag, and then another breakout maybe to the 38.2 fib, which I would expect to be a strong resistance, and I would expect a bearish turnaround right there. So these arrows kind of show what I think are what I would expect are the interesting zones, where the interesting spaces, maybe is the best word to use, spaces. The decision zones are marked at the 38.2 fib and the 104.60, 105 support zones, but also this resistance trend line and this support trend line also could be seen as decision zones. So those 4 levels, I think, are key. And the spaces between, the spaces between those are where I think the best trades can be found. Regarding this bounce right here, let's take a look at that. Looking at candlestick patterns at the moment. At this point, we got 1, 2, 3 bullish candles, a 4th candle here. I wouldn't be surprised if today is a slow day and tomorrow we have to push higher. But R1 could be really the max for today. But I don't know. It's quite a choppy zone, so it might happen today. I won't take that back. I think that's a difficult estimate to make regarding the timing. But regarding the breakout, yeah, the above PP to R1 on the lower time frame 5-50-minute chart, if it breaks above the R1, the main pivot, the green line there, it would also be breaking this trend line And I think that small little hook back on the 5-minute chart could be that space up to the R1 and perhaps further. All right, now there was a lot of momentum here on the 50-minute chart. So, you could see this as a hook back for more downside potentially. That's why I think it's important for price to break above the pivot point. We also see that, this, however, does not really look like a strong start of a downside. This could have been still corrective. So it looks like the correction is still continuing. This does not look like the start of a downtrend to me. But ultimately, if it were to push through this trend line, then probably that is a breakout to the downside. I think the breakout for the downside is best on the hourly chart, looking for hourly candle with a close near the low, pushing through this trend line, pushing through the Keltner. Probably bounce off the S1 with a small pullback and then continue lower. That's what I will be monitoring the hourly chart for that. For this bounce idea, it's a bit risky with the pivot point so close. I think it will bounce, but probably the best time to take that bounce would have been a doji like this. Maybe not the best, but probably the only one at the moment. Let's see. Well, if it hooks back like this and shows weakness here, not breaking this bottom, it could be a bounce straight again. The alternative would be a breakout with a candle, something like this, towering above the pivot point. Here again, the hourly chart, I think I would be looking at the hourly, a break like that, small little hook back or retracement of that candle and a follow through. So I would be looking at this hourly chart for price to pierce through the support of resistance for a breakout. That's basically what it boils down to. On a 5-minute chart, there could be a small bounce trade here if it challenges the support and shows that it's not breaking it. All right, so that's my view on the euro dollar. Now, regarding the market generally, I think there are a lot of basically pairs that have different trends on 4-hour chart versus 1-hour chart. There's not a lot of confluence between those time frames. The exception is the euro New Zealand, in my view. And I'm looking at, I'm talking about roughly a list of the typical 13 currency pairs I look at. I'm not talking about CAD yen, for instance, right? Looking at 13 currency pairs that I favor, ranging from euro dollar to euro pound to euro New Zealand to pound yen, etc. Looking at those 13 this morning, there's not a lot of confluence between the 4-hour and hourly chart, except the euro New Zealand. So we'll take a look at that. There's a huge downtrend. See if there's a piece of the pie left for more bearish continuation. Otherwise, besides the euro New Zealand, the hourly trend is totally opposite of the 4-hour trend on almost all of them. On all of them, actually. All right. Now, if we add the daily chart to that, there might be a bit more, things to look at. Maybe the odd USD bearish correction at the moment is just a correction within a larger correction to the upside still. All right. So that's something maybe to look at. Same for instance, the euro odd and pound odd. That upside could be a correction for more downside, perhaps. So something to look for. The euro yen, pound yen correction. Let's take a look quickly here. Right, this correction, this downside, basically on the 4-hour chart, could just be a correction on a higher time frame for one more break up. So that doesn't mean that there's no potential, but between 1-hour, 4-hour chart, there's this battle going on, and they're not aligned. So got to look at maybe lower and higher time frames to make a tiebreaker in what seems more likely. But let's start off and kick off this webinar, or continue this webinar with Euro New Zealand first of all. Alrighty. So Euro New Zealand, below the pivot point, monthly pivot point, below the S1, we got some two dojis, but below those lows. So definitely bearish territory. We already had a bearish momentum with the lower lows, these candles, just some indecision here, and it looks like price is continuing. That monthly bottom is way, way further here, so there's no danger of that. Weekly chart, two bearish candles already in a row. Of course, there is this basically this weekly low to reckon with, 148.30. That's still far away though. But some bearish momentum there. Daily chart, bearish momentum too, as you can see. Bearish candle, indecision candles, and continuation. All the way down to the 4-hour chart too, showing a downtrend. And the 1-hour chart. 1-hour chart is bearish, but there is not a clear breakout. Last hour candle had a wick. So I think looking for some retracement on the hourly, on a shorter time frame makes sense for continuation lower. I mean, definitely a strong trend. So from my point of view, I don't see any reason necessarily why it would have to stop now. Hourly chart, you know, if you compare this bottom, maybe some divergence there. Let's take a look. Yeah, but it already went back to the long-term moving average, actually, if you think about it. So I would be comparing these two bottoms. In fact, those are not showing divergence. 15-minute chart, there is a bit divergence because of these bottoms. And the downside is pretty choppy. So it would be nice if price shows a bit of upside and shows a zigzag like this. That would be great, because then I could put a fib from here to here and look for targets like here for a turnaround on this Euro New Zealand. There's 150 psychological level 2. Stop loss would have to be above this pivot point, maybe 150.30. That's pretty tight for the Euro New Zealand, but might work out. And the target could be all the way at 148, 149, 148. What was it on the? Let's check it out. Let's see. Second. $149, 148.50. So I'm going to keep an eye on this Euro New Zealand. I think that's a strong downtrend, and would be great if it can make a retracement to these fib targets for one more downside. All right, now it might not do that. I think that this is very choppy, but you never know. It could still push a few pips lower before we get that retracement, or it might never make that retracement. But retracement is something I definitely want to see before I think it's interesting. Will it happen right now? I don't know. We do have engulfing twins here, slow downside, divergence on the 50-minute chart, but it's not, for me, not enough necessarily to go. I don't take reversal trades like this aggressively, personally. It's not in a good situation to take a with the trend trade either. I would rather wait for price to get back to a decision zone up in here to short within the trend. That's my preferred approach. That's the Euro New Zealand. So that's the, I think, regarding the trend, it's the clearest trend available when looking at these range of 13 pairs. That's my view. That's why I think this one is the most interesting. That's why I'm going to keep an eye on that pivot point at 150 for downside. All right, that's one. So that was pretty quick, I guess. We can move on. You know, there are some good trends like the dollar yen, for instance. The thing is that the dollar yen, let's take a look at that. You see, the dollar yen is trending to the upside, but it is pausing on the 4-hour chart or daily chart. Yeah, 4-hour chart, sorry. So clearly, breakout, strong momentum here after the U.S. elections. This huge candle followed by two other candles. Definitely momentum to the upside. Massive monthly candle so far. Still a few days left. Daily is showing a bit of retracement. Two bearish candles. I think we'll see a bit of bull flag, a bit of chart pattern correction. So for the moment, I had fib like this on, but I guess depending on how the waves are counted, perhaps one could use even this fib, something like this, to show that price is at the 23.6 fib. I think I have a wave analysis. Let me check quickly. I have the wave 3, wave 4 at 23.6 fib at 111.02. That's slightly higher than here. Okay. Well, anyhow, I have my fib there like this. Doesn't really matter that much. In any case, let me use this one then for here. 23.6 fib, 38.2 fib, could be bouncing spots. 50 max, I would say. And I wouldn't be surprised. We already see a bit of correction here. Wouldn't be surprised to see price linger like this and then break this triangle or flag to the upside. I might totally be wrong with that. Maybe it does not last that long. We're seeing a bit of correction here. So dollar yen is a perfect example where the weekly is up, the monthly is up, the daily chart is up. Even the hourly chart you can see it's up, right, at this moment. Okay, triangle, let's say. But the 4-hour is showing correction at this point. I would only consider the 4-hour perhaps not to be the correction if this level gets broken, but above all, the top would need to be broken. So that makes trading not as easy as maybe the Euro New Zealand, which is trending. Hang on, let me. Ah, there it is. Alrighty. So yeah, that's basically the situation. So I would, gladly see price move towards these fib levels here for a bounce to the upside, or a break of the tops for a breakout and continuation to the upside. Now I would prefer to look for probably a bullish, strong bullish candle like this. If the close near the high could be enough for me to zoom into lower time frames and look for maybe a small retracement or a break and a flag and then continuation. But not today. I would not be looking for that today. So this is something of a swing trade idea that I'm definitely interested in. I've been bullish for half a year on the dollar yen. It's finally doing what I'm expecting, and I still stay that way. Yes, 112.50 I thought would have been a stronger resistance level than it actually was. It just blasted through that for the moment. And considering this upside, as long as it stays above the 50 fib, I remain bullish. But at this moment, I don't think it's maybe the best timing to trade it right now. Just my view. Definitely interested in it, but I'm waiting for more information, more confirmation that it might, that might change. It might change this week or next week, I would say, probably, in my view. But I will keep monitoring this one and seeing if things change, and if my bias, my expectation, my analysis is incorrect and the upside starts earlier, I will try to measure that by looking at candlesticks and how they behave at these resistances, or how they behave at these support levels, which would be ideal, especially the 38.2 fib would be ideal for a bounce spot there. So that's why I started off by explaining that, there's a lot of contradictory stuff there, like this dollar yen, for instance, uptrend but retracement of 4-hour, the euro dollar, for instance, right? Downtrend on higher time frames like daily, weekly, but bouncing on 4-hour, 1-hour, and lower time frames, right? Potential other shoulders there, maybe. Actually, euro dollar is maybe even slightly better than the rest. The euro New Zealand seems to be the best, but maybe the euro dollar is a tad better than the others because the 4-hour and hourly are more aligned than the others, right? At least the 4-hour has a higher high and a higher low already. So I know that's a small start maybe, but that is already some start for an upside correction, although the trend is down. And therefore maybe a bigger chance that this will upside will succeed. The pound USD, for instance, is a mixed bag, very simply put. So I'm going to skip that one. But ultimately, as you can see here, really a lot of choppiness there, sideways. So, but ultimately, if it breaks this trend line, I do think that there could be a breakout to the downside, or if it perhaps reaches the R1, it could be a bouncing spot. It looks more bearish because price stopped at the 61.8, showed strong momentum. There was momentum here too. Ultimately, I think that this is a bearish pattern, but it's choppy and slow. I don't think it's really a fantastic currency for today. But you know, the pound will move, of course. Typically, is a big mover, so it will have its intraday potential there, and there could be some push, intraday push up or down. I think it could go really either way, but I'm not that interested in it personally. The moving average, by the way, Kertu, this one is 144 EMA close. And I use it as a long-term, or let's say medium long-term indicator, moving average indicator that also for me has the purpose of showing what is the main target for a retracement or reversal. Well, not reversal, sorry, retracement. So once there's divergence on the chart, that's the main target. Now, price could go beyond that 144 EMA, then there's a chance that price is reversing. But if it's only retracing, if it's making a deeper retracement, then the 144 EMA is the target. It would make that deeper retracement typically when there's divergence on a 4-hour chart or higher. On an hourly chart, a single or perhaps a double divergence is needed. On lower time frames, typically double divergence is needed before price makes a retracement to that 144 EMA. Single is often not enough, especially if the trend is strong. All right. So now you can maybe see what I'm talking about regarding the pound and dollar yen. Let's take a look at the Aussie, because the Aussie on the 4-hour, it's just a bit of a mixture here. You see okay, let's dive into this quickly. The weekly chart broke this triangle, not to the upside what I was thinking, but to the downside. Although we had a bullish candle last week and above last week's high. But it could still be a retracement of this breakout. Could be. Let's see. Daily chart, we do see upside here. These are bullish candles. So before I would consider, let's say, this to be a pullback, I would need to see a bearish engulfing twins here. That would be neat. Or what else? Maybe two bearish candles. Then in that case, this could be the end of the pullback and price could be falling again. So that is a bit of twist here on the Aussie. Breakout to the downside, but strong pullback now at the moment. On a 4-hour chart, you see price lingering at the 272 target, and it could make that push up to the minus 61.8 target. On the 4-hour chart, I would say that is a strong resistance zone. If it does get to the 61.8 target, look at this zone right in here. That should stop price, make it fall. But then we'll find out if this is only a retracement this fall within the bigger zigzag, or if a new trend is starting. So for me, the Aussie here, quite a lot of indecision at this point, and a lot of from my perspective, well, a lot of contrary views. If you just look at the 4-hour chart though, without the bigger picture, there's easily a push up towards this resistance. So from that point of view, I think there's more potential for upside than not. Now the hourly is making a strong, or not strong, but a long sideways zone. So this triangle, I think, is the main factor for the moment. And if it breaks the triangle, the only thing is it's not a very easy break, and there's not much space. That's the thing. But at the moment, the 4-hour and daily are up, weekly is down, and there could be just 4-hour and daily charts are pretty strong, so it could ride with that before the weekly kicks in again. Sorry. All right, so here's that correction. I'm not sure. There was a pin bar at the pivot point, so it might be worth trading. It looks like an ascending wedge. Excuse me. So the Aussie, in my opinion, definitely more interesting than the pound, or even the dollar yen. The dollar yen has more potential in the next few weeks, I think, but the Aussie might have more potential today. But I'm still hesitant on this one. Yes, that gap could be there. Am I jumping for joy? Not really at this moment. Maybe if it makes a small hook back here still, or it'd have to break out. Now it's right at resistance. Just a bit too late on this Aussie, perhaps. Ultimately, the momentum is still bullish. So look at these candles continuously pushing here. It's like it's riding in a channel, so it could continue with that. Maybe waiting for, I'm just thinking how to approach it. Maybe waiting for this hourly candle to become bullish. If that's bullish, there's a good chance that this correction is over. And although it could linger sideways, there's a decent chance it will follow through. If it does linger too long sideways, with too long I mean another 5 to 8 candles just going sideways like that, then the upside is not strong anymore. All right, Euro-yen. Oh, that's my email, just in case you're interested in this moving average indicator, for instance. All right, there it is. You can write me, and I'll send it to you. Weekly's up, daily's up, yen is weakening against the euro and pound as well. 4-hour is down, hourly is showing a bounce up, daily is up. So that's one of those examples of a mixture, right? Daily, I should do it the other way around. Daily is up, 4-hour is correcting lower, 1-hour is up. Weekly, well, yeah, I guess it depends how you look at it, but I would still say up because look, this downside happened, of course, and it's very strong, but recently looking at these candles, higher high, higher low, so I would say up. So daily, weekly up, 4-hour down, 1-hour up. So yeah, that's always a bit of a, depends on which time frame traders are looking at, I guess, to see what kind of opportunity there is. If you're looking at this weekly candle, it could be a buying opportunity right at the pivot point, right? As it retraces this candle, stop loss below this candle, target at the R2s, R1s, perhaps R3. Could be one way of looking at it. For instance, not my preferred way, but just giving some inspirational things to test. But sometimes, if the candle is strong, the candles look good. Those are not necessarily bad signals. Um, but always look at the context. So could this be the end of the correction? This downside, it certainly could. We see strong candles already here. Break of this trend line, pushing through the pivot point. So maybe the euro yen 4-hour not aligned, but that does not have to necessarily mean anything. It could just be ready for a breakout. And I'm just thinking maybe the 5-minute chart here is the best. Maybe let it ride, make a bull flag or correction to the pivot point, or a bull flag at the R1 and looking for a break to the upside. Well, even this hourly candle itself, that might be a trade right there actually. Looking at the hourly, that's a breakout candle. That's already posting, that's a momentum candle. It's posting a candle entirely above the trend line. Its close is near the high. Stop loss below this bottom and targeting the R2 for instance. Pound yen, same thing. Let's take a look at the euro pound, which could be better. Well, perhaps the euro yen. Bullish candle yesterday on the euro pound. Downtrend, yes, but downtrend is facing some bullish opposition. So probably euro yen, I would say. Now, I was also talking about the euro odd and pound odd, saying that the hourly retracement here could be just a correction, and that's something that certainly could happen if you consider that these time frames are all showing lower lows, lower highs. Now, there was certainly a big wick here, so a price is at that support level. So that's maybe one thing that's a bit awkward with that. But otherwise, momentum correction. This could easily be bear flag for downside. But then in that case, maybe the pound odd is a bit better. Let's take a look. Minus 272 target. I think this could be a great intraday, intra-week zone if it breaks through this bottom. With a bearish candle like this, for instance, that would show continuation. At this moment, we see a bullish candle engulfing twins here, but if it pushes through the low like that, with the close near the low, bit of a pullback, that's a good zone there on the pound odd as well. Pound New Zealand is also looking bearish, just like the Euro New Zealand, but yeah. There's a slight difference that the daily chart made a bit more upside, but definitely turned, look at that. So yeah, I'm bearish on these euro and pounds versus odd New Zealand's at the moment, but I think that maybe, let's take a look at odd New Zealand. A bit more bullish on the Aussie. So in that case, pound odd is probably the most interesting if that were to happen. Pound odd downside. in that case, the Euro New Zealand might get that retracement I talked about. Let's see, but all four have some potential. It would be good to keep an eye on the Euro Pound and AUD New Zealand to see which one at which time might have the most immediate or near future potential there. But Euro Pound looks bullish candle at the moment. I think there could be a bounce. It's a long-term moving average bottom here. Looks like there's been a correction. So from my perspective, I wouldn't be surprised if price retrace this fib. There's divergence on these 4-hour charts. I think there's a good chance for price to get up to the 23.6 fib and eventually the 38.2 fib. I don't trade the Euro Pound, but or hardly, not frequently at least. Only swing trades, not intraday. And I think that this upside is slow, but it does seem to be in a channel, and that channel could last up to those fibs. Push up, sideways move, and perhaps another push up. But would I trade it here? Not on the hourly chart, maybe on a 50-minute chart. If it breaks this trend line, for instance. Breaks, pull back, continue, or breaks, flag, continue, something like that. That could be a way. Regarding other instruments, all right, oil well eventually broke those support trend lines, made that downside, but also as expected, I was saying that watch out, this could be an ABC zigzag. The whole thing could expand, and as it moved down, it did find support. So it stopped at this 61.8 fib, but if we turn around the fib and put it on this upside, you see it stopped at that 61.8 fib as well. So it respected both 61.8 fibs, both golden ratios, and now it's in the middle between those two fibs. So I would probably consider the upside more likely at this moment. But be aware, OPEC has meetings tomorrow. And the OPEC meetings, well, we'll have to see, of course, what they will decide. But there are reports suggesting that there could be some oil production cutbacks to reduce the supply so that the price therefore might go up. I don't know. Time will tell. I mean, from a technical point of view, I think that this looks corrective, and this bounce was pretty strong. So I think that there could be a bigger zigzag in play like this. But time will tell. Regarding, not really something that I'm looking for to trade. Gold finally made it to that 61.8 fib. Look at that. So was at the 38, and we're looking at a fall to the 50. But it actually it bounced at the 50, it went sideways and extended to the 61.8, neatly bounced at that fib. So anyone who had this fib on, just like we had the last few weeks, would have seen the reaction to 61.8. At the moment, 1, 2, 3, 4, 5 candles not breaking this bottom. And there was also divergence between these bottoms. So that could have been one way of taking a counter trend trade at the fifth candle with divergence, and it's up a few pips there, but going relatively slow at the moment. And ultimately, we'll have to see, if it stays in this channel. If it does, great for the bulls. If it doesn't, I would probably move it to break even any trade, because this head and shoulders here, depending how you look at it, this inverse head and shoulders would then fail probably. It would really need, the price would need to break above this resistance for a move up here. If it breaks through this, then I don't think that this reversal pattern will play out. But look at the fibs. Very simple, just putting a fib on this swing high, swing low, and giving so much value here. Great stuff. We talked about this fib for long. It looked actually at one point that the 38.2 fib could be the turning spot, but it failed to break above the resistance there. All right, S&P yesterday bearish engulfing twins. It made a higher high last week. Second higher high. Price was struggling here, making a big correction, ultimately using the bottom for a pretty strong rally. Here, some consolidation. Here, a triple bottom, making the turn. And I thought that the correction would go a bit deeper, but eventually the bottom being the turning spot. Then pausing here, still making a higher high. Elections giving a dip, and then again a second higher high. But we got bearish engulfing twins here. So is that it? Is that the first sign that there will be your retracement? I don't know. The engulfing twin is not something to ignore, so I would definitely be at least cautious on the S&P 500 for the moment. Let's take a look at the 4-hour chart. I would say that this upside could see a rejection. But I would probably just sit on my hands on the S&P 500. DAX. Yeah, it's it's from a higher time frame. It's just really going sideways. These fibs provided support just like the trend line, but it doesn't have enough power to break basically above these tops. So it looks like a triple bottom or something. Sorry, triple top. Well, in any case, it's not able to break through. We got a lot of stay sideways. And yesterday's candles is really not a good sign for the bulls. I mean, there was already too many days probably where price didn't manage to push through. Yesterday's bearish candle not looking good. I wouldn't be surprised to see at least one more downside here. Would be I think best probably just to wait for some bear flag, and if it breaks that could be downside for the short term at least, to retest maybe some support levels like, let's put a fib like this minus 61.8 target. All right, FTSE does not look that attractive, the stock index at this moment. Upside, downside, bear flag. Looks, in fact, if anything, like it's breaking through this channel. So that looks bearish too. Small bear flag here, could see follow through, I would say. All right, folks, any questions that you might want to ask me? Anything you want to ask, let me know. If you are if you're looking for more webinars, of course, tomorrow we take a look at strategy. Then it takes a look at range bar trading tomorrow evening. Thursday, and then I take a look at the impact of the Italian referendum on Forex, as I already said. We're going to discuss a lot of things, but also the wider picture, the broader picture, not only, of course, the implications for Italy, obviously, that is, of course, where it's all about, the main concern for this Sunday, but what kind of effect could it have not only on the political and economic landscape in Italy, but on the Eurozone and the EU itself, and perhaps also global impact eventually. That all will be discussed 1st of December. There are a lot of events this year. There are a lot of developments, Brexit, the U.S. presidential elections, and this one, although maybe lower on the radar, let's say, than the previous two, could be a potential impact. Could have a potential impact as well, especially if for the Italy and for the eurozone itself. So potentially. So that's something we're going to discuss. And next week, well, we got our usual webinars, of course. So we're also going to have a special article, by the way, 2 articles coming up. You can find those when going to analytics. Go to Trader's blog. There'll be 2 articles on that this week. So if you follow Twitter, you'll be able to find it there. We'll be tweeting about that. If you don't, I would update you tomorrow. Maybe it's already online by then, or Thursday. Or you can check yourself just by going to Trader's blog. All right, no questions. So I think then that there's nothing to discuss anymore. Let's see if the euro dollar makes that upside. Or let's see which way it breaks. I'm expecting upside break, but let's see. Otherwise, I would thought the Aussie indeed could be an upside break, small upside break though. And euro yen continuation potential there on the hourly, and potential 5-minute bull flag continuation, and those euro pound versus odd New Zealand crosses basically. All right, so that's a quick recap. We'll be back soon. Hope you had a good first day of the week, good weekend as well, and wish you all great trading and a great day, folks. Talk to you soon. Cheers.